Good morning and welcome to Stock Market Today. It's Wednesday, July 1st, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Get a lot of the content for this show. Also gives you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So we're going to kick off the back half of 2020. But first, how did we close them out yesterday? We closed them out strong. U.S. equities were higher. Major averages, big rally into the final half hour of the trading session to close the first half of the year. Treasuries were mixed, with the curve steepening. The dollar was stronger against the yen and the euro. Gold was up 1.1%. Gold, an absolute ripper. To local highs, highest level it's been since 2011, September 2011. WTI crude was down 1.1%. On the day, all sectors finished higher. Energy and technology leading the charge. Now, as we get to the desk this morning, futures are down about 20 basis points to kick us off here on the first day of July. European markets are mostly lower, reversing earlier gains after Asia closed higher overnight. Treasuries are a little changed to weaker at the long end of the curve. Now, that's a potentially new theme that we've been talking about for the past week or so. Weakness at the back end of the curve, which is where the momentum has been for some time. So it's an interesting development that's playing out in fixed income that I think makes a ton of sense to be paying attention to. Dollar is weaker against the yen, but better on the euro cross. Gold is up 30 bips, and WTI crude is up 2.9% following some inventory data. As we take a look here, I mean, like we've been saying for a while, that support level at 3,000 on the S&P 500 is proving to be strong. 3,000 to 3,100, below that 2,850 to 2,950. Feb highs still in play as support is holding, right? The playbook has not changed. What about resistance, though? Resistance has been strong as well, right? You can see the battle, right? If you think of this in terms of a football game, right? For those who are into football, we have two teams just pounding each other at the 50-yard line is essentially what this is, right? No headway one way or the other, right? Solid defense on both sides of the ball, right? A lot of times when I teach my class, I use analogies like that for football, right? Because at the end of the day, it's like who's in control, the Bulls or the Bears, right? And right now, nobody's really in control. For the past few weeks, it's been a battle at the 50-yard line. We'll see, who starts to gain some traction. But we've identified the key levels that will tell you who's winning the game should they break one way or the other. Now, we are near oversold conditions. Chaikin money flow is bullish, but waning. So not much has changed here in the past couple of weeks, right? Support's holding, but so is resistance. The battle is playing out. As I've said a couple of times this week, these are the environments where you want to go identify what's leading, right? And that's where you want to find your potential ideas, both long and short, bullish and bearish, right? Find what's leading. Those are your bullish ideas. Find what's lagging. That's where you should be looking for your bearish ideas. So it's pretty simple. Market going sideways, but that doesn't mean there aren't areas of the market that are doing well. And that's our all day, every day. That's what we're trying to figure out. Let's talk about our market in a minute now. Strong close to the month and quarter as support continues to hold. I think we hit on that. I think we hit on that fairly well. Sentiment is mixed with options traders remaining bullish, but the VIX is still elevated. And that's kind of an interesting dynamic that's been at play for a while. Speculators continue to reduce short exposure in the S&P futures. We're not going to hit on that there. That's a topic that's in my note. The median return in July is positive going back to 1950. I'm going to show you data going back to 2001 here in this show. And as I said, futures do point to a lower open here today. Taking a look at the major indices now from a power bar perspective, the Dow up 75 bips, 4 to 9. A little bit of an improvement there in the Dow on the power bar. Same goes for the S&P 500, up 1.5%, 96 bulls to 115 bears, 33 to 13 for the NAS, which outperformed yesterday. Small caps and inline performers, 622 to 287. Big jump higher in their ratio. Bonds down ticked, in price, sending yields lower. Energy was the leading sector, up 2.25%. 2 bulls to 15 bears in the energy complex there, and that's actually an improvement. It's been 0 bulls for a long time in the energy complex, so something to start to sit up and maybe pay attention to. According to the Chaikin Power Bar, small cap stocks are more bullish than large cap stocks. Major indexes are mixed. Our stock of the day is Archer-Daniels-Midland. It's highlighted in my note to Chaikin Analytics clients. Very bullish stock, strong trend above the rising long-term trend line, strong industry group, food products. What intrigues me about ADM here is look in the lower right-hand corner of the screen. You can see that yellow line that I've drawn. You can see a steadily improving relative picture. We went from deeply underperforming to now actually on the verge to slightly outperforming. That's an intriguing setup to me. That's what's known as a personality change, right? Coincides with the rating recently turning very bullish, Chaikin money flow being bullish. And then from a tactical setup perspective, the overbought oversold indicator is beginning to move higher in an oversold position. So to me, this is an interesting setup to look for opportunities on the bullish side of the coin. So take a look at ADM, Archer-Daniels-Midland, for a potential opportunity on the bullish side of the portfolio if you are in fact looking to add some ideas. We're highlighting it in our note today, and I think that it makes sense for some people who are looking for long ideas to take a look at that one as well. All right, let's hit our sector tracker now, moving to the major sectors over the last 5 days. Materials, the only one that is green, followed by REITs and tech outperforming. Healthcare also at the top of the list. Those are groups that, well, remember yesterday we talked about healthcare, right? We talked about the fact that healthcare was testing relative support and would be important for it to hold from a relative perspective. And so far, so good. Middle of the road, staples, industrials, utes. Bottom of the list, discretionary, financials, comms, and energy. Not a ton to say here. I think, you know, as the first half of the year closed, I was looking through, you know, kind of big picture momentum, right, at the asset class level, and not a ton has changed, right? It's in the equity market, it's still growth. A little nuance to that growth picture is that if I was kind of mapping out the top 4 or 5 ETFs, small cap growth has kind of creeped into that list, right? Where it had predominantly been growth and large cap, right? Quality as well. Small cap growth has jumped into that group, but still it's kind of an offshoot of the same theme. And we've actually said it here where, you know, we think if you're going to play small caps, growth is the way to do it. Taking a look now at our industry in focus, it's biotech services. Speaking of healthcare, we talked about biotechs here last week, and over the past 6 months, an absolute monster if you've been there, outperforming the S&P 500 by over 21.5%. Power bar ratio, which measures future potential, is very strong, 47 bulls to 11 bears. Currently ranked number 5 of 21 subsectors, and it's actually moved down 3 slots over the past week. So names that make sense to have on your radar screen: Alexion, ALXN, very bullish; Kibia, AKBA, very bullish; and Voyager Therapeutics, VYGR, also very bullish. And let's take a look at the fund. I mean, bullish fund, right? Strong trend above the rising long-term trend line, 47 to 11 on the ratio. Bullish money flow, outperforming. So bullish, outperforming, bullish money flow. The idea is to get them when they're oversold, right? And for me, lately, kind of coming out of those oversold positions, right? To me, that's the interesting setup. Right now, it's overbought. So I don't necessarily think I'm chasing biotech here, right? If you're there, good for you. I think that the best situation would be a consolidation above these highs within the highs of this consolidation that works off this overbought condition and allows the setup to be there on the long side once again. So take a look at biotechs. Definitely want to keep them on your radar screen. Taking a look now at the movers and shakers. Yesterday's gainers and losers. CFG, not a name that I've ever actually seen. I'm sure, taking a look here. CFG, Citizens Financial Group, right? Haven't really talked about them a lot, but kind of laid out key aspects of their capital plan. Investors like what they heard there. Xilinx, earnings send the stock higher. Hologic, HOLX, is actually a name that I recently featured for Chaikin Analytics clients. It caught an upgrade at Cowen, send that stock higher by about 7% on the day. MPC, taking a look at what's happening there, still with a very bearish rating. MPC, nothing company specific to drive trading in that name on the day. Western Digital up 5%, a bearish stock, and it's kind of hardware had a good day within tech. Nothing company specific driving trading in Western Digital there. On the loser side of the board, Boeing giving some back after being the top gainer. Basically a cancellation, right? So after some good news on 737 MAX, Norwegian canceled some of their orders. So that took a hit out of Boeing after rallying 14% plus the previous day. Molson Coors on the loser side of the board, nothing company specific to drive trading there. LHX, L3 Harris, part of that aerospace and defense group that I was not too keen on recently. Nothing company specific to take 3% out of that stock on a big up day for the markets. Southwest Air, not a ton going on here. Just kind of lower with the rest of the airlines, down 2.5%. And HWM, an unrated stock here at Chaikin Analytics. Not a ton happening with that name. Let's dive into the charts. Sentiment day here at Chaikin Analytics in my note, and the picture remains mixed, right? Options traders still showing excess greed. Now, not as severe as it was a couple of weeks ago, where we got down below the levels we saw in January or February, but still below 0.6, that's excess greed in the market, right? This to me is your retail traders, right? The Robinhood traders, the folks who have kind of just been, I don't know, call it YOLOing their accounts. I think that the options traders, it's very retail focused at the stock level, right? And they've seen this excess greed in the marketplace, right? Whereas the VIX, on the other hand, remains elevated. The VIX is still above 30. It's still above the levels or near the levels that have marked peaks over the past 5 years. So that's still a sign, in my opinion, of some trepidation in the market, right? Some fear in the marketplace. So it's a very different picture. Now, what I will note is that specs have been covering, right? That was a dynamic that we talked about. We've highlighted it here on this show. It's in my note. I don't have a slide for it today for the show, but that Z-score of spec net positioning is back to -1, so much less extreme than it had been. So just an interesting dynamic playing out there. July is generally a positive month for the market. Take a look right here in the middle of the screen. All right, there's a lot of talk about sell in May and go away. It's a little more nuanced than that. And so what's interesting is June is traditionally a down month, and it was, right? It's only higher 55% of the time, average return negative 60 basis points. But July is generally an up month, right? Higher 63% of the time since 2001, with an average return of about 1%. Now, I do median returns in my note, same story. But what's interesting is then we get to the back half of the summer, right? And where August and September are traditionally down months with much lower probabilities of being up. And then we'll wrap it up with new highs for gold, going out GLD, going out at new highs on this chart anyway. Highest level for gold since September 2011. Look at the scooter at the bottom here, massively outperforming, getting close to an overbought condition. Yeah, we've been bullish on gold for well over a year. So, kudos and congrats to anybody who's taken that ride. That's going to wrap us up. Take us for a test drive, chaikinanalytics.com/test drive. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.